What is up, guys? It is Antaro, and today I am making a video on SMT divergence. As you guys know, one of my favorite entry confluences is a SMT divergence, so today I'll be covering exactly how you can trade it and how you can spot it in the markets. And after this video, you'll never need a video on SMT divergence again. So starting off, SMT is divergence, so it can be a divergence between indices or between forex pairs. And the way I like to use divergence is the divergence between NQ and ES, or NASDAQ and the S&P. So I trade NQ and ES futures, and this is what I use to differentiate them. And this is what a SMT divergence will look like on the charts. Notice how NQ here, let's say that this is NQ. We put in a higher high, higher low, higher high, higher low, and a higher high, where we distribute lower. And right here, as you can see, we put in a higher high, higher low, but right here, we failed to take that high. Again, where NQ took that high. And this would be ES. So the divergence that we're forming is what this is right here. This is that SMT divergence between NQ and ES. So right here we have a divergence at the highs or at the buy side level. So this is what a bearish SMT divergence would look like. We can see NQ puts in a higher high and ES puts in a lower high, forming that SMT divergence. And then it sells off afterwards. Right? So this is what a basic bearish SMT divergence looks like. It is just ES and NQ, one takes a high, the other one doesn't, and then shows you a displacing move afterwards. That's literally all a SMT is on the bearish level. And in this case, NQ would be the stronger pair because NQ took the high and ES didn't take the high, so this would make ES the weaker one because it wasn't strong enough to come and take the high, if that makes any sense to you. And right here, this is a bullish SMT where NQ puts in a lower low, lower high, lower low, lower high, and takes this level, forming that SMT, where ES puts in a lower low, lower high, lower low, lower high, but a higher low where it doesn't quite sweep that level. So this would be that SMT divergence between NQ and ES. So now what we'll be looking for in the charts. So what SMT is just a added confluence to your entries. So let's say we have a fair value gap right here. Let's say we have a fair value gap right here, right? We form a SMT at the lows and inverse that fair value gap, right? There you go. That will be an entry. That will be an entry in itself right there. And you can take on either pair. Does not matter. On either pair. Fair value gap right there. It does not matter. In my personal opinion, I personally like to take the trades on the pair that sweeps the high or low. Another way you can trade this is a turtle soup model, where we sweep that low, form a SMT right here, and enter on the next up close candle, so you can have a more sniper entry, stop loss at the low, and just target your draw on liquidity. Same idea. This would be that turtle soup, where it's just a sweep of liquidity with SMT. So when you have a SMT and a clear draw on liquidity, you can honestly take any entry to target that draw on liquidity, because a SMT is honestly the greatest indication of a reversal in the markets. So you can enter on a inverse for value gap, turtle soup, a normal for value gap, a breaker block right here, anything. So this is what a basic SMT looks like. So let's take a look at some more examples. Here's an example of a SMT divergence that occurred today on the 15-minute chart. As you can see, NQ came lower, taking this low, where ES came lower but never ended up sweeping this low right here, forming that SMT divergence with NQ and ES. Right? On NQ right here, we sweep this low, and on ES, we never sweep that low, forming that SMT. So this right here would be that SMT divergence, showing a uncorrelation of the pairs and indicating that we have a potential reversal in the market. So notice how we sweep this low right here with a SMT and then have a big displacement off of it, right? Same here on ES. We don't end up sweeping this low, but we do have formed that SMT, showing a big reversal off of it. So here on the 5-minute chart, what is that telling you? It's telling that price wants to reach higher for higher prices. It's indicating to us that the market has a lot of buying pressure that's going to buy price back up. So you want to try to catch the reversal on this SMT divergence move. So what you could have done is played a long position into OTE of this range, which is, I know a lot of people caught a nice long off the bottom to OTE from just this SMT divergence. Notice how when NQ sweeps this high and puts in the SMT, we instantly bounce back up, and ES, with even more bullish structure, comes to all-time highs right here, right? So SMT is a added confluence to your bullish or bearish position if you have the correct draw on liquidity, right? So you don't always need to be entering on the SMT. What you can do is drop down to the lower time frames, find that SMT, and then you can form an entry off of it, right? Right, so dropping down to the lower time frames, like right here on NQ, price put in this 3-minute fair value gap where you could have went long off this reaction off that SMT. Boom, go long off that 3-minute, stop loss at the low, and just target OTE, and you would have caught a nice position. I know a trade that one of my friends caught today was off of OTE of the displacement from the SMT. So right here, where we displaced off of that SMT, we formed this range right here, and price came back into OTE where you could have went long off of. Stop loss right below that zone, and just target OTE of the range. So you don't need to enter on SMT every single time. It's just they added confluence to your entries. Right here, here's another example of SMT where ES swept this high right here, and NQ never swept that high. As you can see, ES put in a higher high above this one, but NQ never did. And as you can see, price is displacing bearish off of that. So to use this as an entry, you can drop down to the lower time frames, and then try to find a entry model. Like right here, we form a inverse fair value gap right here. So we have a higher time from SMT, right? Higher time from SMT, and then a lower time from inverse fair value gap, which is a entry model. So you can go short right here, stop loss at the high, and just target some lows. Right. It's that simple. It's that simple, really. Obviously, you want to pair this with a higher time frame bias and a draw on liquidity for it to work majority of the time. But it's a great indication of a reversal in price. So moral of the story is SMTs are very, very strong, and the more you trade in the markets, the more you experience and you get with it, you're going to be using it more in your arsenal, you're going to be using it more in your entries, and it's just going to make your trading a lot better. So starting now, I want you to start backtesting this SMT, start backtesting the SMT divergence, start incorporating it in your trades, and watch how your trading changes for good. But thank you guys for watching. If you have any questions, leave me in the comments below, and I'll see you guys later. Have a good one.